Alrighty, guys. Good morning. Welcome to this Wednesday, March 11th. and market is kind of just in a holding pattern right now. Not much is going on after this crazy Monday, Tuesday stuff. Oil is back down in mid 80s. Still not quite out of the woods by any means. It needs to come down a lot more than it is, but it's definitely off the highs. And the major panic about that Iranian situation is kind of backing off a little bit. So the fear of that oil being cut off is what's been kind of mitigated a bit. But that's so that's what's been spooking the market the last few days now. Overall, the market is not going really anywhere today in the overnight. It's kind of sitting in a holding pattern, kind of wait and see, I would say. And we're still up here above that 6760s. Big move down here. That was that crazy stuff happened on Monday. But if we can get back up above that 6815s, we'll be back in good shape again. Now we had news this morning. The small business, no, sorry, the mortgage apps came in. That came in a little bit on the upside. No negative numbers, but a little bit to the upside. Today also we get CPI. That's going to be at 8:30. That's a big one. And oil report at 10:30. 10-year auction at 1. So I would say that CPI read is going to be a big one, but I think people are going to look mostly past it, even if it's kind of no matter what it does, but it's unless it's a big surprise to the upside, which I don't think it is. If it ticks up a little bit, no big deal. But next report is going to be the one people lean on because that's going to show whatever this oil shock, what that impact is on the inflation side of things. So right now, I think we're just waiting for that 8:30 news and see how the market reacts. And if they can hold this 67.60 level, we're going to stay range bound and just trade the market as such. If they take out the 67.60, I would look for a potential retracement trade back, retracing these single print M prints from Monday, and see if they can trade back down and retest these lower support areas at the 40s to 30s and the 67 15s. So that's kind of the dynamic I'm looking at this morning. If the number is good and the market reacts positively, I would look for a move to the upside. And short opportunities start at, let me see here. Yeah, it's going to start here at the 68.10, 68.05s, 68.20s, 68.30s, up to the 68.50s here. So that's the, actually, these two should have been changed. Yeah, I forgot that one. Missed that guy. So what I'm just going to do here is I'm going to cancel that guy right there and drag that up a little bit. And up like that. All right. Just a little bit on the fly stuff changing here. So, so looking for that. There you go. So looking for short setups up to that 66.830 and then up to that 68.50s. Now there could be something in between, but it's like it's a little bit off there, so I'm not going to be that crazy about it. Drag this up a little tad like so. That's a little adjustment there. So, so depending on how the CPI reaction comes in, you're either going to stay range bound, or chances are, if the number comes in a little bit harder, that we may see some weakness out of that. The market has been pretty darn resilient, given the crazy stuff happening in the last couple of days. Yeah, it swung pretty wildly, but overall we're kind of back to where we started, a little bit to the downside. The market, it feels very much like it's trying to trade higher. It's just this part of the year, February, March, which is just notoriously knocking it around. And so I would start off range bound today. If the news knocks it below 67.60s, look for a potential retracement trade to these lower support areas. And if it's very positive and they start taking out the 68.30s, I would wait for them to take out that 68.15 to 30s. So these two resistance areas, the 68 to 5, 68.15 to 18, and then 68.30. These three resistance areas comes out. I think we're right back up in this upper area at that point. So this is the upper edge here is about 25. So but this is just a general highlight on the F1 to show you where the potential resistance is. It's not that precise at the edges. The F2 is a little bit more precise. So you have three levels here, then you have to blow through. If they can get through past all these three, we'll start leaning in on the long side and see if they can take this higher. So initially looking for shorts against that 68.05 to 8, 68, 15 to 18, 68 30s for rotation down. We're going to buy against weakness, 68, 67, 60s, the 40s, 30s, and the 15s here, 15 to 20s here for rotations back up again. If they take out the 15, 67, 15s, bets are off. I think we are at that point heading lower to this lower support at the 68 30s. Or 66 30s, and that's this lower support area. So that could get gnarly, but I don't think the CPI today is going to be that crazy. It's a number which people kind of pay attention to, but it has been pretty darn slow. It's not been large changes. If it starts creeping up a little bit, no big deal. If it's next report, I think it's going to be the one which matters. And then looking at the Nasdaq. Nasdaq is already back at that level, so they swung right back here to value, and they've been trading their probe here yesterday to the upside, backed off, and we are right back here to this level again. It's going to fold that together, and so we're starting off range bound on the Nasdaq as well, looking to buy weakness. If they start trading below that 650, there's going to be these two support areas on the bottom. That's going to be a bad scenario. If they start trading above this area, these 120s. I would be more inclined to look for a run up here to that 450 level. So initially, starting off range bound, watching that CPI reaction. If you get some strength, I'm looking for shorts against the 25,050s, the 25 100s, and the 140s for rotations back down. Above that 140 level, I think we cleared that general resistance area, and we're heading higher at that point. Still looking for shorts against these upper areas, just not as aggressively at that point. And on the way down, looking to buy weakness against the 24 900s, the 850s, 780s, 730s down to the 670s and the 610, 600 to 610 here. These two lower support areas are the ones which need to hold. If they start taking those out, I think we are on our way down to this lower area at the 380s at that point. So that's kind of the dynamic this morning. Kind of a boring start maybe, but it's could certainly pick up. You never know. Some of these days we start off with looking at like nothing turns into be the big up or down days. But as I said, I mean, we have some earnings still coming out, but right now I think everything is leaning on the price of oil. So if you have make sure you have an oil chart up so you can see what's going on there. If that starts spiking, you can expect volatility going on the indices as well. And then finally, looking at the bonds, bond market is drifting right back down to the tractor at 115 here. So they just took out the lows to my lower support area, and it looks to me like they may be drifting down to that 115. So that slow, like to the institutional drift to the downside is what that feels like. So I'm starting off on the short side, looking to sell strength against the 23 24s or 22 24s, and then 29 to 30s up to the 1602s, rotations down. So these three are looking to sell against these three resistance areas. If they take out the 1602s, I'm going to take off that short bias and going back around. Probably take it off already at 1529 to 30. And then look for confirmation at 1602, probably look at it that way. So it's trading about 1602. I think we're heading higher at that point. And if they, otherwise I would look for short setups against them now. Given that it looks like this, you kind of have to take a little bit of a little bit of a breath and try to figure out if this is a continuation, that more institutional selling going on there, or something else is happening. But there's absolutely no buying at all here. It's just slowly drifting to the downside all the way down. So yields coming up. bond price is coming down, and in the bigger picture on the bond, it's just drifting back to this lower area right there. We were up in this upper area, now they're right back to that lower area. So I haven't really quite moved out of any crazy range. It's just moving back to an attractor area. There we have it, back to the ES and the NASDAQ. So starting off on the short side on the bonds, see how far they can take it. And the ES and NASDAQ is just twisting in the wind where we left them. So news coming out in about 15 minutes, so not much else to say about it. But starting off range bound right now, watch the lower 67, 60 to 65 on the ES. If that comes out, look for that retracement trade. On the NASDAQ, same story there. We have a bit of room to the downside. It's a potential retracement scenario setting up there as well. But pay attention to the news, and then we'll trade it as we see it. And we know what levels they need to hold otherwise before we start looking for a potential direction. Alrighty, guys, we'll wrap it there for now, and I'll see you back at 11:30 for the next update. Alrighty, guys, later.